coming up to exactly 12 o'clock. This radio controlled watch is an hour behind. For some reason it hasn't updated. I'm just looking at this diagram I made for, you can see classic divergences, price making lower lows, indicator RSI making higher highs. And I think it's important when the divergence crosses the 30% or the 70, and when it's more than 5%, and when the price occurs at a day low or day high. So this is just my merit on RSI. Is it more than 5%? Is the signal on a key level? Is it the first time the market got oversold or overbought? Does the divergence cross the oversold or overbought boundary? Is there a double divergence? And are there other divergences in the other time frames? And these are just some of the little tweaks that I've made on RSI to improve the effectiveness of the signal. For example, there wasn't really any signals in oil today. It was pretty choppy. You can see the price swings that we had. They were very volatile. However, right here, that happened to be on the pivot, and this is the 5-minute chart. I know that, and I missed that signal. In the 1-minute chart, there was a divergence, and I can show you that. It's just a matter of not being focused. It was really stupid. You can see, look, here we are on that fib level. It happened to be the pivot. The pivot's now missing. Look at the bullish divergence. We have flat price trending down, and look at the huge divergence. And then, oh, the market just opened. We had a forward tick. And then we had a double top. It's a bit messy. I just trimmed those wicks. I don't normally do that, but you can see double top and a big bearish divergence, and we sell off. And then this was the strategy entry for the team. This was the third test of a trend line that I spotted, and there was no signal in RSI, so I didn't take it on, and we rallied. And then there's no more bearish signals for the sell-off. S&P, there was a double bottom in price, no signal in RSI, but here there's a bit of a double top there. It's a naked signal. You can see there's a drop. It's 8% in RSI. I can just drag these little lines here so you can see what I'm talking about. You can see we have lower lows in the indicator, but there, in that place right there, it looked more definitive in the 1-minute chart. And this is after I went out. You can see, look at this double top in price, and look at this huge, it's not huge, it's minus 7.5. So RSI's down, and then we sell off some like 8 handles. It's a nice setup. In cable, I said this was the February 29th level, and I spotted that at 10 o'clock, and I lost track of it because I went for a jog there. But look at that nice bearish signal. It's minus 6%, and then we sell off aggressively. Look at this double bottom in price, and look at this bullish divergence. Another naked signal. It's actually a little bit close to, it's a bit of a stretch, but you can see I took the support on the first wick of the candle and I chopped off those wicks, but it's pretty good support, and that's why we have a bullish divergence, and we're up, and then we're back on that level. And again, I didn't take that trade on, and look, we have a little weak bearish divergence. I can tell you what the divergence is. Right there, that first peak is, it's 67.7, and then right there it's 64. So it's only 2.7%. Remember, I said, is it more than 5%? That's the magic number that I look out for. So what else happened? Gold, you can see we have a double top in gold, intraday double top. We got a bearish divergence, and I wasn't following gold very much today, and we sell off some like 15, 16 bucks. So you can see how there's always momentum. And I did spot this signal. This is the February 9th high. It's acting as support. This is the daily downtrend line. That trend line was broken, and it acted as support there. It's a trend line retracement, a virgin one. Second one, third one. Double bottom in price, and look, we have a bullish divergence. I didn't take on that trade, and we broke that trend line. But if we go to the 1-hour chart, you can see how that trend line was So here's the daily downtrend line. Look, we break above it, and then you can see how that trend line acted as support 1, 2, say 3 times. It got chopped through there, but you got to go to the daily chart to see how important that downtrend line resistance was. And I got to zoom out because we got to go way back to, gosh, when? That's like December. Look, 1, 2, 3, and we're looking at the fourth test. So nice channel too. We got a lower parallel trend line, like 1, 2, 3. I mean, this is the structure in the market. It's beautiful. So tomorrow I'm going to be focused. I'm going to nail these bloody trades. I'm pissed off. I got to stop spotting my signals and not pulling the trigger. It's the bane of my existence. It just comes down to being cowardly and risk adverse and looking for the perfect trade. If I don't spot the trade in the exact candle on my level with my signal, I don't take it. Like, who cares if I spot it 5 or 10 minutes late? It's brilliant stuff. This divergence. It's just basically we're just basically seeing a change in momentum, and more than often before a price reversal, you get a change in momentum, and you just expect price reversals on levels where they're probable. So when you put all that together, you just have a solid strategy for buying into the weakness or selling into the strength or joining a trend in the third test of a good trend line. What else was there? Euro dollar, not much. Cable was nice. That was pretty good. Ugh. Big signals, hey? 1, 2, 3 signals back to back. Look, breaks on, breaks on, breaks